If you invest 2000 per month in SIP mode in Mirae Asset Emerging Bluechip Fund, you could generate a wealth of 4.67 crores. The all-time return for this fund is 22.44%. Hi, I am Nilesh Bodhi, and today we will be seeing how we can generate a wealth of 4.67 crores by investing 2000 per month in SIP mode in Mirae Asset Emerging Bluechip Fund. NAV of this fund is rupees 86. The AUM, that is asset under management, is 21,932.38 crores. There is no lock-in period in this particular fund. The exit load is 1% if you exit in 365 days. The expense ratio is 0.76%, and this is a very high risk category fund as per the risk parameter. In 1 year, it has generated returns of 14.86%. In 3 years, it has generated 21.16%. In 5 years, it has generated 16.37%. And since inception, it has been generating 22.44% returns. This is a large and mid cap category equity fund. The performance of this particular fund is excellent and the downside protection is very good. That means if the market falls, this also falls, but compared to the market, it falls less. So performance and downside protection both are good in this. The minimum SIP which you can do in this fund is rupees 1000 per month. When it comes to portfolio allocation, this fund is having an equity holding of 99.61%, and the number of stocks in this fund is 72. If you see the allocation by market cap, it is investing 58.07% in large cap, 39.44% in mid cap, 2.03% in small cap. If you see the top stock holdings, you can see 5.96% in ICICI Bank, 5.51% in Infosys, 5.13% in SDFC, 4.03% in Axis Bank. And if you see the allocation by sector, you can see that 27.81% in financial sector, 10.78% in technology, 10.26% in healthcare, and 8.43% in automobile. Let us see the fund parameters now. So here we will be seeing standard deviation, beta, Sharpe ratio, and the alpha. So standard deviation gives an idea about how volatile fund returns has been. Higher the standard deviation, higher is the volatility of the fund. Here the fund is volatile, as we can see from the value when it compared with the category average. Beta gives an idea about how volatile fund performance has been. Okay, when it has been compared to this similar fund in the market. So here, as we seen, this is volatile, but there is one thing which we have to consider when we are considering beta. So a beta less than 1 is basically less volatile, greater than 1 is more volatile, and equal to 1, that means it is identical to the overall market. Since here it is less than 1, it is not that much volatile because it is as per the parameters set. So Sharpe ratio, it indicates how much risk was taken to generate the returns. Higher the value means fund has been able to give better returns for the amount of the risk taken. Here, as we can say, the Sharpe ratio is better than the category average. It is more. So it is able to generate good returns. Alpha indicates how the fund has generated additional returns compared to the benchmark. Here, the alpha is better as compared to the benchmark. Now, if we consider this fund, means if we compare this fund basically with the Nifty 500, you will come to know that this fund has been continuously beating the benchmark, as we can see over here. So a fund which continuously beat the benchmark is always a good fund because it will generate good returns over a period of time for you, and hence you should be investing in this kind of fund. This is the best parameter when you compare it with the benchmark. If the fund is able to generate better returns from the benchmark, you should definitely invest in that fund. Now let us consider that this fund would be generating 20% return for the next 30 years. And if it generates continually 20% return, and if we invest 2000 per month as an SIP, what would be our total returns in the next 30 years? So for 5 years period, the invested amount would be 1,20,000. Estimated returns which you would consider, which will get, is 86,908, and the total including the invested plus estimated amount would be 2,06,908. For 10 years, the invested amount would be 2,40,000, estimated would be 5,24,727, and the total including invested plus estimated would be 7,64,727. For 15 years, you will be investing 3,60,000, estimated returns would be 19,08,590, and the total would be 22,68,590. For 20 years, the invested amount would be 4,80,000, the estimated amount would be 58,42,959, and the total including the invested amount plus estimated would be 63,22,959. For 25 years, your invested amount would be 6 lakh. The estimated returns would be 1 crore 66 lakh 53,416 and the total would be 1 crore 72 lakh 50,416. For 30 years, your invested amount would be 7 lakh 20,000. Your estimated returns would be 4 crore 60 lakhs 1,604 and the total including the invested plus estimated amount would be 4 crores 67 lakhs 21,604. So if you invest 2,000 per month in an SIP mode and if this fund gives a continuous return of 20% for next 30 years, you would generate a wealth of 4 crores 67 lakhs 20,604. Now, if you invest 2000 monthly for a period of 5 years and you compare this with similar instruments in the market along with mutual fund, let us see what happens. So in a bank FD, you get 6% annualized return. So your gains would be 22,775, whereas the total corpus would be 1,69,295. In PPF, the annualized return is 7.10%, wherein your gains would be 27,444 and the total corpus would be 1,73,964. In EPF, the annualized return is 8.5% and your gains would be 33,633, whereas your total corpus would grow to 1,80,153. And if you consider a mutual fund, basically an index fund wherein you are investing, and if you consider only 11.25%, normally any index fund would give you a return in the range from 12% to 16%. So I'm just considering 11.25% for the sake of calculation. So your gains would be 46,640 and the total corpus would be 1,93,160. So this is the comparison of a mutual fund with other instruments in the market. Note: mutual funds are subject to market risk. Please read all the documents carefully before investing. Past success does not guarantee any future performance. If you wish to invest in mutual funds, email us at bodhifacilities@gmail.com or contact us on 7349701701. If you would like us to plan your mutual fund portfolio, then please fill in your data by clicking on the link given in the description. If you also want to watch this video in Hindi, then I have given the link in the I button also in the description. Please subscribe to our YouTube channel for such amazing content. Please also don't forget to hit the bell button next to subscribe button. That's all in this section. See you in the next video. Till then, take care.